Kenya's digital economy contributes about 8% to the gross domestic product. The contribution is projected to grow to 10% by the year 2025. With a view of tapping revenue from the digital economy, the government, through the Finance Act 2020, introduced the digital service tax that took effect in January this year. To get a deeper understanding of the new tax, I spoke to Nickson Omondi, who leads the digital economy team at the Kenya Revenue Authority. This is how the conversation went. Thank you for staying with Business Insight. Tonight on our interactive session, we'd like to have a conversation on matters digital services tax. This tax came into effect on the 1st of January 2021 after it was introduced in the Finance Act of 2020. To give us an overview of what impact it will have on the Kenya's digital economy is Nickson Omondi. He is the team lead at KRA, that is the Kenya Revenue Authority, in charge of the digital economy. Thank you for joining us and welcome on set.
Thank you and welcome as well.
Asante sana. Yes. So what is this digital services tax?
Digital service tax, as the name suggests, is a tax on digital services. Actually, there's been a lot of misconception that if you sell goods through an online platform, are you liable to digital service tax? No, you are not.
You're not.
It is the provider of the digital platform who pays digital service tax. Digital service tax comes at a time when the economy is undergoing, a transformation. Of course, accelerated by COVID-19. When most of our activities, including business activities, have gone online. And this is not just because of COVID. We know since the 90s, when people using computers more so in Kenya, maybe they came earlier, we find that the various facets of the economy are undergoing transformation. They are being digitalized. For example, today if you want to monitor your farm in Kitale, you might simply need a gadget in Kitale and you're able to monitor the farm, how it is doing right from Nairobi. Instead of traveling all the way to go and see how your products are doing or your crops are doing, or even cows. There are agricultural, the kind of mechanizations that have happened that you get signals every now and again. You go to the health sector. Now you are able to contact a medical professional at the comfort of your home. Explain to them what you are undergoing, and they'll give you advice. You go online, get your medicine from another store or chemist, and they get delivered by a digital platform rider. So basically, the health sector is also being digitalized. Look at the way we shop, okay? All you need is to go online, pick the goods you want, get somebody who will deliver them, again engage them digitally, and you get them delivered to your doorstep. So basically, the world is moving digital. And if you look at the tax laws the way they are not able to capture some of these developing economies or the digitalization that we are talking about to ensure that everybody contributes their fair share of tax. You see digital service tax coming in. Number two, the taxation is largely dependent on your physical location in a place. Actually, the proponents of tax who came up with some of these rules came up with what we call the benefit theory, that you pay tax in an area where you derive benefits. And of course, you derive benefits if you are present there. You use our good roads, you use our good security, and therefore it's only fair that you also contribute. But now, people can enjoy the good environment created by our good government while they are not physically present. They can sell services to Kenyans, because without security, water, infrastructure and all that, people might not derive the income they derive from Kenya. And therefore, tax needs to move with the times. So if you are a local person, and you're offering similar services, you'll pay tax.
Yeah. Right. So as you roll out this tax currently, how do you know that someone qualifies, or who qualifies to pay this tax?
First of all, we have a current motto in KRA. Our main mission is that we trust and we facilitate taxpayers. So that is the first line we are using to implement digital service tax. So whoever knows he's falling within the law and they are providing digital services, they need to come forward, self-assess and pay. If you don't, because we trust Kenyans, and even the law also says we presume you innocent until proven otherwise. So if you don't comply, then what we need to do is now to get other sources of information that will lead us to you, to know you didn't comply. Then we take other mechanisms that are provided for in law. And those procedures might not be very good. Yes, so first of all, self-declare, come forward, apply for registration, pay the taxes. If you don't, then we use other mechanisms, because we are living in a digital world and there's a lot of information. Because digitalization is actually enhanced by data utilization. So a lot of information is available on the web that can lead us to know who is supplying digital services and who is not, and whether they are complying or not.
For someone maybe who does not really understand what these digital services or service providers are, you said about selling goods. Say if I'm selling dresses online, am I eligible to pay this tax, or is it the platform that I'm using? Could you just clarify on that?
Digital service tax is applicable on digital services, what people say electronic services. Let me give you examples to drive it home. Right. One is those people who provide intermediation. They provide platforms where buyers and sellers meet to transact. We are not looking at the buyer, we are not looking at the seller. We are looking at the provider of the platform where buyers and sellers meet. And this platform should be electronic. So there are those platforms that enable one maybe to buy a ticket. You want to go watch a movie. So somebody has provided a platform where you, as the person who want to go watch, you are able to get the ticket. And then the other person who is provided the movie services is also able to sell. So you are connected.
Right. And how about for social networks, so to say, the social platforms, where maybe someone has a page or just their personal account, they go post that they sell shoes and they meet, say, a buyer there. Who in this case pays the digital service tax?
In the social space, I think there are three kinds of transactions that are very important so that we clear. One is where you have a following and you monetize your page in the process. Because some of those social media platforms pay you based on your following or the activity on your page. If that happens, you have earned through a digital means. You have monetized your page through a digital platform. Right. So you are liable to digital service tax as the person earning the income. And then number two, somebody wants to promote his brand or her brand through your page because of the following you have. So what happens? They engage you, they tell you put up this product on your page, and then we'll pay you so much. Okay? That person is doing digital advertising, which is a digital service. And therefore, again, you as the owner of the page, you pay digital service tax because you are the one earning through the digital platform, but not the company or the person advertising. Because the person at the end of the day will sell shoes or will sell products. And if they are tangible goods, they are not liable to digital service tax. Then the third level is where the platform itself places an advert on behalf of others. I'm sure you've watched those platforms where you are told what you want to watch will happen after seconds, 3 seconds or so. And during those seconds, what happens? There's an advert. Now that ad has been paid for by whoever is advertising, and the money goes to the platform owner. So that platform owner is also earning through a digital means and therefore liable to digital service tax.
Being that the digital space is global, how would you know that this is a service that is being offered in Kenya?
In the regulations, there's a definition of what we call user being located in Kenya. You pay digital service tax if your services are provided to a user who is in Kenya. Okay? Because that is where you are deriving the income. So a user is deemed to be in Kenya if the following are met. The first one, the services are paid for by a credit card, a bank account, or a debit card that belongs to a bank in Kenya. So we'll assume that the user was in Kenya. Number two is about access proxy. You accessed the digital services through an internet protocol which is registered in Kenya. .co.ke. The web hosting is actually in Kenya. But again, that might cause issues with VPNs. But you see, the other proxy still applies, the payment proxy. So we need to look at that. So those are kind of the pointers that we are able to use to know the services were provided to a Kenyan, or you earned the money to Kenya, and taxpayers are well guided.
Now that we know who qualifies and the location and all that, what is the procedure now, the process of administering this tax and maybe the collection process?
Betty, that is well, put. One, for you to register, you can register as a resident or a non-resident. Residents are people who are already within our database, or they are located in Kenya. They will get a PIN through the normal process. Okay? And for them, they don't undergo further registration. So what we have availed on iTax is a simplified mechanism where they visit the payment tab in their iTax profiles. And then when you go to income tax, you'll get another drop-down menu. Amongst the taxes, you'll see DST. So you move, generate your payment registration number, and then you use it to pay. That is for residents. For those who are not within our borders, non-residents, we have availed also a simplified system to enable them get PINs. So they will apply for a PIN. They need to attach two main documents. The equivalent of a PIN in their country of registration. In some quarters, they call it the transactional or identification number. Some people call it the tax identification number. Together with the certificate of incorporation. Some people call it certificate of registration in their jurisdiction. So with those documents they attach, then there are minimal fields to be filled in, and then you are issued with a PIN. So with the PIN, you also do the same way the residents do. Your iTax profile, go to payments tab, and then you're able to follow to income tax, digital service tax, and then you pay. So it is a simplified way of doing things because we want everybody to comply. And remember, we are also going global. We want the global entities who are not here also to comply without a lot of, without introducing so many complications to them. So basically, it is a self-assessment. However, the law also recognizes that for those who are outside Kenya, they might wish to use other Kenyans to assist them in registration, filing, and payment. So the law under the Tax Procedure Act, Section 15A, allows those non-residents to appoint somebody referred to as a tax representative. So they need to appoint that tax representative by a letter to KRA, and then the tax representative will apply on their behalf, account for the taxes, file the returns, and pay as if the tax representative is the non-resident.
So that is just the simplified process of getting these taxes.
Very true. Still simplified.
What is the rate of the taxes? At what rate is it charged?
The tax is it's the lowest in the world. Yes, 1.5%. Of the gross transaction value. So if, for example, I'm selling my movies online, if I receive 20,000 in a month, then I'll pay 1.5% of 20,000, which is basically how much? 300. So that 300 is what I remit by 20th For example, if I sell it today in March, I'm expected by 20th of April to remit the 300 to the commissioner. And there's no small money, there's no big money. All counts to the tax, that is to be used by the government. Yes.
And what is the penalty of not remitting, so to say?
Of course, if you fail to remit, first of all, there's a penalty of 20%. And then there's also an interest of 1% per month of non-remittance. So any day, you remember, any month you fail to remit, there's a further 1% interest. Yes. So it's important that people comply. Because you see, now you pay 20%, then you start adding 1% per month. Sometimes it might look so heavy.
It's better to just comply.
Very true. And the rate, look at the rate. It's very favorable. In other jurisdictions, they do as much as 12%, some 6%. There's even 7.5%. Tunisia here does 3.5%. Zimbabwe, I think, does 5%. Yes, so our rate is quite favorable. Yes.
And is it a final tax, this DST?
No. For residents, DST is an advance tax. It's not an additional tax per se. So what will happen is you pay DST. When you file your final return, you claim the DST back.
Okay.
Yes. So if at the end of the year your taxes are 600, you had already paid 300 as DST, then you only pay a further 300. But for non-residents, it's a final tax.
So that means this notion by the naysayers that it will increase the cost of business, is it true?
Not really. For residents, you see, it's not an additional tax. It's not that you are now paying the tax earlier, okay? But at the end of the year, you get to claim it. For non-residents, maybe not. But it depends with the laws, how their laws are structured on the other side.
And what is the projected collection now for the digital services tax? Being that the Kenyan digital economy is quite massive, what are you looking to collect from this?
You see, the digital economy is big. Okay, and some people put it at hundreds of billions. But even within the digital economy, remember, a good chunk is also sale of goods. Because if you look at the definition of e-commerce, it's just sale of goods through digital platforms. And you see, DST is not applicable on goods. So there's a big chunk that lives, however much the digital economy is huge. However, our projection currently is to do 5 billion annually. From the digital space, because it's just starting, and then maybe with time we'll see how it spans out and see if whatever adjustments are necessary. But for now, it's only applicable on services, and 5 billion is the projected collection. 5
billion. Yes. It took effect on 1st of January. How are things looking so far? We're in March.
Very well. Yes. We are doing very well. Actually, we are on course to the 5 billion. The response in January was overwhelming. Yes. So I think generally Kenyans are very compliant people in tax, and we want to invite more to continue complying so that, to avoid the issue of penalties and interest. And of course, instead of enforcing, when you enforce, you might end up, closing somebody's business. We want Kenyans to continue doing their business.
So now let's talk about, say, people who are aware. They know that they qualify to pay, and they still choose not to register and or pay. Sure. Is there a mechanism that the authority has of going after them?
If they are residents, there are mechanisms. Okay, there are mechanisms already prescribed in law. Yes, where you need to remind them, you need to send them letters. If they are not, then you take up maybe enforcement and recovery mechanisms. For non-residents as well, there are global instruments now which are available to tax authorities, where they can communicate with other tax authorities in other jurisdictions, saying so and so has failed to abide by tax laws of our country, and then now other mechanisms can be implemented. We are living in a global village.
Yes, that's right.
Yes, and some of these rules are now cutting across jurisdictions.
Do you have a grace period for, just to encourage people to, volunteer themselves to be taxpayers for this tax?
No, there's no grace period for now. It expired. Because the regulations were out by 11th of December 2020. And the law was very clear that DST will take effect from 1st of January. So for that, there was no grace period. But there's another tax related to digital services known as VAT, on digital marketplace, which is purely for non-residents only. It is the one that had a grace period of 6 months, which is expiring in March from September. So I think the government saw the need to give people grace period at least to comply.
And are there any maybe digital service providers or people in the digital marketplace who are exempted from these tax?
Yes, there are a number of exemptions. And I'm happy that you brought that. It's important for our taxpayers to know. If your income has already been subjected to withholding tax, then you are not subject to further digital service tax. You know, withholding tax is collected by whoever is paying you, the payer. Okay? Then there are also incomes which fall under what we call telecommunications. They're usually chargeable non-residents at 5%. So if that income has suffered the withholding tax, sort of, the 5%, then the taxpayers don't need to do DST. And then we have online systems which are used by government. I'm sure we know them, to facilitate mwananchi to procure public services. They are also not liable to DST. And then the final one is services for payments, borrowing, lending, or trading for financial institutions listed in the 4th schedule to the Income Tax Act. The 4th schedule lists a number of financial institutions, like banks, which are regulated by CBK. We have insurance companies, of course, as registered by, is it the insurance regulatory? Yes, but under the Insurance Act. We have microfinance institutions. There are also SACCOs, okay? And then there are building societies, and I think 1 or 2 more. So any entity which is providing a digital service, and they are within that schedule, they are not liable to DST. And then there are also entities which are not within that schedule, but for them to operate, they need to be licensed or registered with Central Bank. They are also not liable to DST. And the last one is entities whose income is already exempt.
So Kenyans and their hustles can continue online.
We want them to continue, but they should also not forget that other taxes apply to them. Yes, VAT, income tax, turnover tax, they should take cognizance of that.
So even as we come to a close of this conversation, what is your rallying call to Kenyans?
My rallying call is Kenyans should support the government by collaborating with the Kenya Revenue Authority. And how do we do that? Let's register for the taxes that we are supposed to register for, and let us be compliant. And in case you know of a neighbor who is not compliant, we have a whistleblower mechanism, which you can give us information, and then we are able to get people who are not contributing to our tax net. Yes.
Well, thank you very much for giving us that information.
Welcome.
All right, I have been speaking with Nickson Omondi. He is the team lead in charge of digital economy at the Kenya Revenue Authority, and we have been discussing matters, the digital services tax, and who qualifies, how you need to register for that tax if you qualify, and we hope that you comply if you do, if you are eligible for that tax. My name is Betty Kiptum. Continue enjoying Business Insight.